Today I will reveal a very strong Forex day trading strategy that I use for a few years already. Why I like this particular strategy? Because it is very adaptable with other tools. It is very reliable because it takes into account the way the market moves. Now, I personally tested the accuracy of this particular strategy, and trust me, it is pretty accurate. And this strategy basically revolves around one particular indicator. This strategy is best suited to catch momentum of the price, so it doesn't matter whether the momentum will come from the bottom to the top or from the top to bottom. This particular indicator will show you in advance when the price momentum is shifting, how you should trade with it, and it will also give you an exact signal of when to enter into the trade. It revolves around one core indicator, which gives us the moving average of the price. It gives us the signal to entry, and you can combine it with variety of different tools like Fibonacci retracement, supply and demand, support and resistance levels. You can combine it with other indicators. You can combine it with different candlestick patterns and all of these things. So without further ado, let's go right to our chart. So now we are at our trading desk. Currently I'm on euro against the US dollar pair, so let's talk about how to execute this strategy. As I've told you before, this strategy is resolving around one particular indicator, and that indicator is called exponential moving average. So let's go to indicators, let's write exponential moving average, and for this strategy we actually need two exponential moving average lines. So let's press it 2 times, boom. Now we have two different exponential moving averages, and this particular strategy is called exponential moving average crossover. So that means that we will have two different EMA lines, and when they will cross, they will give us an indication where to open, buy or sell positions and where the momentum is going. So in order to set this strategy up, we first of all need to have these two exponential moving indicators on our charts. Let's go to settings. So the first exponential moving average line, which will be shorter, should have the length of 8, and in terms of style, this will be the signal line. So it doesn't matter what will you choose, but I personally like it to be red because this will be a signal line. And if we're talking about the other line, we should go to settings and we should write an input of 14. So this will be a longer length EMA, and remember that moving averages means that they basically take previous candles. In this case, if we have an input of 14, that means that the blue line will take 14 previous candles of the price and it will devise a moving average, so basically average movement of the price. So we know that exponential moving averages is a really good indicator. A lot of people use it and it is really accurate, and this particular strategy is used to catch the momentum of the price, to catch reversals and to get the signal to enter the position. So let's talk about how to actually use it, and this is a simple example of how does it work. So if you remember, now we have two lines, and the red line is a signal line or a trigger line, whatever you want to call it. And basically this is a crossover strategy. So that means when the shorter term EMA, which is in this case the red line, crosses the blue line, the longer length EMA, that is a signal to open a position because the price is changing its momentum. So if the cross happens from the bottom, so the signal line comes from the bottom and pierces through the longer length EMA, that means that this is an indication to open a buy position, boom, like this. And for example, if we have a crossover from the top to bottom, so the trigger line crosses from top to bottom, that means that over here we should open a sell position. And let's actually see how does it work in action. So if we go to this particular place right here, we can mark our support or resistance levels, it doesn't matter. And as you can see, here we had our first cross. Here I can see that we have a support level, and basically here we have a cross, and according to this strategy, here we should open sell position, boom. So let's open a sell position, and as you can see, this would have worked perfectly because the price literally went downwards, and before that the price was heading upwards, so it seemed like it was an upwards movement, but actually this indicator indicated that the price is changing its momentum. The cross happened from top to bottom. We opened a sell position, and look at the size of this move that we could have potentially caught. Then we can move to see other crosses. Here we have another cross, so we can mark our resistance and support level. Here we obviously have the resistance level because here the price is being resisted. Then first of all the price breaks the resistance, and second of all we have our other EMA crossover, which is right here. It is behind these candlesticks, and we should open a buy position like this, and boom, as you can see, this worked perfectly as well. We can open another position and make money. If you want to educate yourself more about trading in general, about strategies, about how to properly trade, leave that like button, subscribe, and see you in the next episode.